Welcome to Bull and Block, unlocking your financial future. The power of annual reports. Investing can be intimidating, but it doesn't have to be. One of the most powerful tools you have is the annual report. Think of it as a company's financial diary. It tells you how they're doing, where they're going, and what challenges they face. By understanding annual reports, you can make smarter investment decisions. You can grow your money with confidence. It's time to empower yourself as an investor. Cracking the code. Navigating the structure of an annual report. An annual report might seem overwhelming at first glance. Don't worry, it's like a book. It has different sections that tell a story. Once you understand the structure, it becomes much easier to digest. Typically, an annual report starts with a letter to shareholders. This is followed by the management's discussion and analysis, or MD&A. The heart of the report is the financial statements. You'll find the balance sheet, income statement, and cash flow statement. Don't forget about the notes to the financial statements. They provide crucial details that clarify the numbers. The auditor's report is also important. It confirms the accuracy of the financial information. Lastly, you'll find information on corporate governance. This section tells you about the company's leadership. It also discusses the risks the company faces. By understanding the structure, you can easily navigate the report. You can focus on the sections that matter most to you. A message from the top. Deciphering the letter to shareholders. The letter to shareholders is like a personal message from the CEO. It's their chance to tell you about the company's performance. They'll highlight successes and challenges from the past year. Pay close attention to the CEO's tone. Are they optimistic about the future? Do they acknowledge any difficulties? The letter also offers insights into the company's strategy. What are their plans for growth? Are they entering new markets or developing new products? Read between the lines. Look for what's not being said as much as what is. Does the CEO address investor concerns? Do they provide concrete plans or just vague promises? The letter to shareholders sets the stage for the rest of the report. It gives you a sense of the company's overall health and direction. Use this information to guide your analysis of the financial data. Behind the scenes. Uncovering insights in the MD&A. The management discussion and analysis, or MD&A, is where things get juicy. This section provides a deeper dive into the company's operations. You'll learn about their industry, competition, and future plans. The MD&A explains the numbers behind the financial statements. Why did revenue increase or decrease? What are the reasons for changes in profitability? You'll gain insights into the company's strategy and how they're executing it. Look for information about the company's competitive landscape. Who are their main rivals? What are the industry trends? The MD&A also discusses the company's risks and challenges. This section is crucial for understanding the context behind the numbers. It helps you assess the company's long-term prospects. Use this information to form your own opinions about the company's future. Section 5. The financial scorecard. Understanding the balance sheet, income statement, and cash flow statement. Now let's talk numbers. The financial statements are the heart of the annual report. They provide a snapshot of the company's financial health. The balance sheet shows assets and liabilities. The income statement shows revenue and expenses. The cash flow statement tracks cash movement. Together, they give a complete financial picture. Section 6. The fine print. Why notes to financial statements matter. The notes to the financial statements are often overlooked, but they're essential for understanding the numbers. They provide additional details and explanations that aren't included in the main financial statements. Think of the notes as the footnotes of the report. They clarify accounting policies, provide details about significant transactions, and disclose any contingent liabilities. For example, the notes might explain how the company values its inventory or how it recognizes revenue. They might disclose details about a lawsuit against the company or a pending acquisition. These details can have a significant impact on the company's financial position. Don't skip over the notes. They provide valuable context and insights that can help you make informed investment decisions. Take the time to read through them carefully. You might be surprised by what you find. Section 7. Trust but verify. The role of the auditor's report. The auditor's report is like a seal of approval from an independent accounting firm. It confirms that the company's financial statements are accurate and reliable. The auditor examines the company's financial records and accounting practices. They express an opinion on whether the financial statements fairly present the company's financial position. A clean audit opinion means the auditor found no material misstatements in the financial statements. However, an auditor may issue a qualified opinion or an adverse opinion if they find problems with the company's accounting. A qualified opinion means the auditor has concerns about specific areas of the financial statements. An adverse opinion is a red flag. It means the financial statements are not reliable. Always check the auditor's report before making any investment decisions. It provides assurance that the financial information you're relying on is trustworthy. Steering the ship. Examining corporate governance. Corporate governance refers to the rules and practices that guide a company's management. It's about ensuring accountability, transparency, and fairness in the company's operations. The corporate governance section of the annual report provides information about the company's board of directors. You'll learn about their experience, qualifications, and independence. This section also discloses the compensation of the company's top executives. Pay attention to the board's composition. Are there independent directors who can provide objective oversight? Is the board diverse in terms of skills and experience? Excessive executive compensation can be a red flag. It might indicate a lack of alignment with shareholder interests. Strong corporate governance is essential for long-term shareholder value. It ensures that the company is well managed and accountable to its investors. Use this section to assess the quality of the company's leadership and their commitment to ethical practices. Navigating the waters. Identifying and understanding risk factors. Every business faces risks. The risk factors section of the annual report outlines the potential challenges that could harm the company's financial performance. These risks can be internal or external. Internal risks might include operational issues, management changes, or product failures. External risks could involve economic downturns, regulatory changes, or competition. The company will describe each risk and its potential impact. They might also discuss how they're mitigating these risks. Pay close attention to this section. It highlights the factors that could derail the company's success. Consider whether the company has adequate plans in place to address these risks. Understanding the risk factors helps you make more informed investment decisions. It allows you to assess the company's ability to navigate challenges and achieve its goals. Putting it all together, making informed investment decisions. Analyzing an annual report is like putting together a puzzle. Each section provides a piece of information that contributes to the bigger picture. By carefully reviewing each section, you can gain a comprehensive understanding of the company's financial health, its strategy, and its risks. Use this information to make informed investment decisions. Ask yourself, does the company have a solid track record of profitability? Is it well positioned for future growth? Are the risks manageable? Your goal is to identify companies with strong fundamentals, a clear strategy, and a commitment to shareholder value. Remember, investing is a marathon, not a sprint. Take your time, do your research, and make decisions based on facts, not emotions. By mastering the art of analyzing annual reports, you're empowering yourself to make smart investment choices and achieve your financial goals. Staying ahead of the curve. Tips for ongoing analysis. Analyzing an annual report shouldn't be a one-time event. It's crucial to stay informed about the companies you're invested in. Make it a habit to review quarterly reports and listen to earnings calls. These provide updates on the company's performance and any changes in its outlook. Compare the information in these updates to the annual report. Look for consistency or any red flags that might warrant further investigation. Don't hesitate to reach out to the company's investor relations department if you have questions. They're there to help you understand the company's financials and its strategy. Remember, knowledge is power. By staying informed and engaged, you can make more confident investment decisions and achieve your financial dreams. So dive into those annual reports, ask questions, and take control of your financial future.